Chat. We're back. We're streaming about something different than GameStop. Because GameStop's pretty boring right now. And there's some good earnings coming up, so that'll be more exciting, I think. Maybe, I don't know. I haven't done an earnings stream in a while. So, we'll see how it goes. My trench is like 99% done. I just have a little bit more tampering to do. Pretty exciting. And I gotta go buy a pallet of concrete. So we're almost there. And then, lay the concrete. Potentially I might have to cut out more cement, because my cement downstairs is kind of messed up. But we'll see when that time comes. But, yeah. Fun stuff. I don't know if I want to react to anything. Let's see. I think GameStop earnings are in like a week, so that's kind of cool. It'll be nice to see like how Power Packs is done, and if there's any other. Maybe they sold more like Bitcoin calls or something, because Bitcoin is down. That'd be pretty interesting if they sold more calls on Bitcoin. And see like the real eBay position, maybe. Maybe they'll give you the exact eBay position. Who knows? One sec. Moose Man! Moose, I missed you yesterday, bro. I was wondering where you were at. No, I don't think, they haven't announced it yet. I'm sure they'll announce it after today, I would imagine, because we're getting pretty close. I don't know if I want to react to anything. Let's see. Took holiday to golf, but it rained. Ah, internet's getting fixed. Well, hopefully they do a good job. Hopefully you're getting that Google Fiber or something good. What's this? I mean, this is old. But I guess at this point it doesn't really matter. Just gotta react to the content, I suppose. It kind of sucks that I wasn't able to react to all this stuff when it was happening. Because now it's been like 2 or 3 weeks. Kind of sucks. I got a bunch of wounded soldier water bottles, bro. I got like 5 water bottles that just are like halfway empty. I don't know, man. It sucks that I wasn't able to react to all this stuff. I friggin' smashed my finger when I was finishing the concrete. I had like the sledgehammer, like pinch my finger between the concrete and the sledgehammer. It sucks. Let's read this. I think this will be okay. It's a little bit newer. I don't know. Yeah, I don't know. Whatever. We'll just read this for now, I guess. Who wrote this? Reuters? Alright. Let's blow this up. What is this? What is this ad, bro? Get me out of there. Get rid of. Why is this ad so large? Get out of here with that, bro. What is up with this ad, dude? I can't get rid of it either. So dumb. Whatever, I just won't read the title, I guess. I just won't read the title, I suppose. The ad is a joke. All right. I guess the stream's dead again. Is what it is, I guess. Alright. GameStop CEO Ryan Cohen shared few details when he said he would do whatever we need to do to buy eBay after the e-commerce company rejected his $56 billion unsolicited takeover bid as neither credible nor attractive. I think the bid was credible and attractive. They just don't want to lose their jobs because Ryan Cohen's going to come in and fire everyone. In early May, Cohen offered eBay's board $125 a share, as well as his services as CEO. Half the offer was in cash and half in stock, with the cash portion coming from GameStop's $9.4 billion in cash reserves. GameStop also has a non-binding commitment letter from TD Securities for up to $20 billion in debt financing. If the combined company can secure investment-grade credit ratings, industry analysts have questioned whether that will be possible. Yeah, I'm not sure whether the investment would have investment-grade credit ratings because of how much debt, but I don't know. I don't know too much about that, if I'm just being honest. Cohen raised more questions on Wall Street with vague answers in recent interviews to questions about how he would pay for eBay, a company nearly 5 times the size of his own. He gave really good answers in other interviews. I think these guys are just referencing the CNBC interview, and even the CNBC interview was really good. Despite the resounding refusal from eBay's board, bankers, investors, lawyers, and industry analysts say Cohen has an unlikely but not impossible path for wresting control of eBay. Resting? I thought it was wrestling. Wrestling! Tender offer. One option for Cohen, who co-founded online pet goods retailer Chewy and is credited with turning around GameStop in 2021, would be to bypass eBay's board by approaching shareholders with an offer to buy them out at a premium through a so-called tender offer, more than half a dozen bankers, lawyers, and analysts said. By approaching shareholders with an offer to buy them out at a premium, he already did that, though. He already offered them a premium, and the board denied it. But I guess if he gets the shareholders to vote on it and agree to it, the board doesn't really have a choice. While tender offers are relatively rare, they can make a lot of noise. Paramount Skydance used one that promised all cash to pressure Warner Bros. Discovery into negotiations, despite its existing agreement to sell to Netflix. Paramount ultimately won after being rejected at least a half a dozen times. Yeah, I think that's a very good example of, probably what Ryan Cohen's going to end up going through. He's probably just going to get rejected over and over again, and he's just going to be so persistent that eventually they're just going to have to do it, or the shareholders will vote for it, and then they're going to be forced to do it. And in my opinion, the management team kind of screwed over the shareholders of eBay, because the offer that Ryan Cohen gave them was very good and they just denied it. And now eBay hasn't really been moving. So just, I don't know. They should have accepted that offer just for the shareholders. It would have been super valuable. GameStop would have to convince eBay's largest institutional investors, including Vanguard, BlackRock, and State Street, who run the world's biggest index funds. Together, the three own more than 22% of eBay, holding the stock automatically as a part of the index they track. Analysts say it is highly unlikely these firms would jump to approve a hostile takeover bid. Or Ryan Cohen convinces the retail shareholders. If Ryan Cohen can convince more than 50% or 49% of the shareholders of eBay, I don't think Vanguard, BlackRock, and State Street really have much of a say. Or, maybe Nat Turner owns like 4% of shares, and maybe there's a lot of people Ryan Cohen knows that already own eBay. You never know. You never know. There is zero chance that a tender offer works, said Don Bilson, head of event-driven research at Gordon Haskett, adding, no eBay shareholder would opt into this. I don't know if I'm so sure about that. Shares of eBay have jumped 32% so far this year, giving the company a market value of roughly $51 billion. It reported strong first quarter earnings, citing high growth markets like collectors of memorabilia, toys, and other items. eBay's business still isn't doing that well, but whatever. Since Gme Gamestop took over as CEO in 2020, after activist investors forced out his predecessors, eBay's stock has climbed by about 200%. I mean, it's mostly climbed just because of buybacks, though. It has nothing to do with the business doing super well. They're just buying back shares and, selling shares as the stock goes up because the management team gets given free shares through stock-based compensation. And they also get paid out dividends. So, a 200% climb is decently impressive, paying out dividends the whole time. GameStop shares are up by more than 11% so far this year, but since Cohen took over as chairman in June 2021, the share price has fallen by about 70% after accounting for stock splits. Well, the shares were super overvalued when Cohen took over. That was post short squeeze, so really wouldn't expect much from that. Representatives for GameStop and eBay declined to comment. Special meeting. Cohen, who has told his advisors he may want to go directly to shareholders, could also call a special meeting to elect new directors who may be more sympathetic to his offer. To do that, he would need to buy more shares. GameStop recently said it now has 6.6% economic exposure to eBay, up from roughly 5%, but not all of that conveys voting rights. Most of GameStop's economic interest in eBay stems from put-call pair derivative positions tied to 29 million shares of stock that would only carry voting rights if the contracts are physically settled. GameStop owns just 25,000 shares of eBay outright, roughly 0.006% of the company. Well, they have enough money to, exercise the options at any time. And potentially they sold puts and bought calls, so, buying the calls might not have even costed them anything, so they could still be sitting on that massive cash pile. And also be up like 400 or 500 million on the option position. Even if those derivatives are eventually converted into voting shares, GameStop's ownership falls far short of the traditionally required 20% stake in common stock to call a special meeting. Oh, I didn't know about that. I didn't know if you had a 20% stake, you could call a special meeting. That's pretty interesting. So that's probably, what the goal is for GameStop, is to get a 20% stake, and then Ryan Cohen himself will probably have a 4% stake. Maybe Nat Turner already has a 4% stake. And who knows who else has a 4% stake. I guess we'll see, but that's pretty interesting. I didn't know that. GameStop appealed to its own investors on Friday to authorize the issuance of more stock from 1 billion to 2.5 billion shares, increasing speculation that Cohen plans to issue stock to buy more eBay shares. I don't know if they'll issue that many shares, but I think the goal of the raising the shares outstanding is for when the stock's up to raise more convertible bonds, or if you get another short squeeze, if that's even possible, you could do another stock offering. And I assume they'll issue some shares to buy eBay, but I think that's yet to be determined if that's actually going to happen. Because though, they did do that offer, 125 a share, 56 billion, I think the real deal was they buy out 50% of eBay shares, and then the other 50% gets rolled over into the new company. So technically they would only be acquiring 50% of eBay and have to use money to buy 50% of eBay. We view our equity as precious and do not intend to issue new shares lightly. A reserve of authorized shares ensures GameStop can act decisively when the right opportunity arises, the company said in a letter to shareholders. Mark Cohen, former director of retail studies at Columbia Business School and the former CEO of Sears Canada, and no relation to the GameStop CEO, was skeptical the plan would work. If he had the capacity to mount a proxy fight, he might get away with it, but he doesn't, so the eBay board blew this off, said Mark Cohen. He's got enough money to make the claim, but not enough money to make his claim stick. What do you mean? They got a $20 billion confident letter that they could get a $20 billion loan from TD Bank. They have the money. Public pressure. Ryan Cohen's best option, analysts and investors said, may be to exert public pressure on the board to wear directors down. He is already doing that, saying eBay needs to be on Ozempic, it's literally obese, in a public interview with investor Anthony Pompliano, and telling journalist Piers Morgan the company is run by a bunch of losers. That's hilarious, man. Analysts take issue with that characterization, saying eBay generated an inevitable operating profit margin of 31% in the last fiscal year, 3 times as high as GameStop's 10%. Well, eBay is a lot larger of a company, and they could have made a lot more if the management team actually cared about eBay. Cohen famously helped save GameStop from possible bankruptcy in 2021, as hedge funds bet the ailing video game retailer stock and market valuation, teetering around $250 million, would continue to fall. He later took heat for launching a campaign as an activist investor in 2022 against Bed Bath & Beyond. The retailer's stock price collapsed after he sold his shares for a $60 million profit. The company was forced to issue more shares until it finally filed for bankruptcy in 2023. So far, his bet on GameStop has paid off better for other investors. It now has a market value of $11 billion after Cohen, who joined the board in 2021 and became CEO in 2023, cut costs, pivoted the focus away from video games and toward trading cards, and made big share offerings that delighted legions of retail investors who supported him during the face-off with the hedge funds. They didn't pivot away from video games. They still sell video games. And they actually, started focusing on retro gaming and used console and refurbishing consoles. So they actually started focusing a little bit more on video games, but of course, trading cards are becoming a bigger part of the business because trading cards are super hot right now. I'm an owner-operator, Cohen told Morgan, trying to lay out differences between him and eBay CEO Gme Gamestop, suggesting he has more skin in the game. While Wall Street awaits Cohen's next move, several bankers and lawyers noted that an unwelcome bid is a slow process, and Cohen is not tied to any time constraints to move quickly. One of his options would be to just sit there and wait, Gordon Haskett-Bilson said. There's no rush. Yeah, there really is no rush. Of course, I feel like you kind of want to get those warrants in the money so people will exercise the warrants, but you still have a little over 4 months before those expire, so quite a bit of time, but I guess we'll see what happens. That wasn't bad. I actually like that article. I didn't know you could call for a special vote if you were a 20% stakeholder. That's pretty interesting. I hope they do issue those shares. I'm already in the money with my puts. You think that's gonna continue if they buy eBay? Do you ever like bring anything of value to the stream, or do you just talk about your little short position? It's kind of weird, bro. Maybe you should try bringing value. Wait, what happened to your calculations? Weren't you supposed to share some like calculations or something like that because you're such a smart investor? I don't know. What happened to that? Finally got my voting form off T212 and IBKR to vote for on all points. Think we'll see fireworks on explosive expectations beat tomorrow. What? GameStop's earnings isn't tomorrow, so I don't know what you're talking about, but the stock's never going to squeeze. And if it does squeeze, it's not going to be when you think it's going to happen, or anyone thinks it's going to happen. It's going to happen randomly, so it's not even something I think about. It's a long-term investment. I don't care about the squeeze. Where's my chat today, though? Are we just back to a dead stream again? That's pretty whack. It is what it is, though. It's not surprising. People only come in this stream when GameStop's up, because they're all fake investors, most likely. Corey wants a hug. That's the only squeeze he cares about. No, I don't want a hug, actually. Don't touch me. What's up, Grady? How you doing, man? How you doing, Grady? I'd like my stream to squeeze. I don't really care about GameStop stock. This is gonna work out over time. So I'd like my stream to squeeze though. You still mad? Oh, no, I'm just gonna ban you because you're not gonna bring your analysis here. You're not gonna bring anything beneficial. So you can just be banned for life. I'm not mad. I've never been mad. You think I give a fuck that you're shorting GameStop? Why would I care? You think you're cool because you're up like 10 grand, 15 grand? Like, good for you, bro. I don't give a shit. I was up like 60 grand 3 weeks ago and I didn't care. GameStop's gonna make me a multi-millionaire, so if you think I care about your little 10, 15 grand profit, I don't. Good for you, bro. You probably won't take profits. You'll probably get wrecked before you take profits, because just judging by the way you've typed in my chat, either one, you're not even short GameStop, you're just trolling, or two, you're an idiot, so you're probably just gonna get wrecked, and you're gonna lose all your profit. So hopefully you take profits, but judging by the way you type in my chat, that's probably not gonna happen. Job interview this week. Wish me luck. Well, good luck, Grady. What job? What are you trying? Where are you trying to go work? I need to get a. Whoa, what's up, my? I'll fix my screen here. There we go. That looks a little better. Gotta get the Palo Alto earnings ready. Data analyst role at the company I currently work for. Oh, nice. That's sick. So it's kind of more like a promotion type thing. That's awesome, bro. I hope you get it. Let's see. Is it on Zoom? Why is it on Zoom? That's weird. When does it start? Oh, nice. It's a little bit earlier one, so that's good. Can I still do the split screen? Nice. Nice. Maybe we'll even get a... Well, what the heck? There we go. Maybe we'll get a YouTube short. We haven't done a short in a while. It kind of changed the website, though. I wish I could get rid of the AI thing. I'm kind of in the way of the chart, but whatever. Is what it is, I suppose. Like, no, that's not gonna do anything. Oh well. Showed you how often I check the stock. I knew it was Wednesday. It's just next week. I was referencing Region Formal's predicted earnings for this quarter. Been fairly close the last... What? I don't even know who that is, bro. I don't... I've predicted the earnings every single time pretty much to perfection, so I'm not worried about what other people are talking about, but I have no clue what that is. And if you're promoting a YouTuber, that's weird. Yeah, I don't know what that is. It's not really that hard to predict what GameStop's going to do for earnings, though. I don't know what they're going to do this quarter. I haven't really took the time to analyze, but you're also going to have you should have power pack numbers. Those are unknown. Yeah, I think there's a lot more unknowns this quarter, so. But I'm just gonna delete your message because I don't know if you're like promoting someone or what. If you're promoting someone, this isn't the place for that. Go to a different chat to promote whoever the hell that is. I don't care what people's predictions are. I don't care what people think about GameStop. I'm just an investor. I just live my life. Gotta sharpen my SQL skills. It's lateral in terms of pay, but I think I'll enjoy the work more. Ah, I see. Well, that's cool. That should be dope, I feel like. I think power packs are going to be material, so they'll be reported under the equity method. I have no clue what you're talking about. I have no clue what you're talking about. Well, this sucks. Back to a dead stream. I'm not promoting anyone. I was asking your opinion. It's a guy on Reddit predicting $1 EPS. So you're promoting someone. If you're talking about some guy on Reddit, you're promoting someone. But I don't have an opinion. I already said that. If you're talking about some random person, you're promoting them. I don't get how that's pretty simple to understand, I feel like. If you've been in this stream before, you know you're not supposed to promote people. So I don't know. Power Packs is an investment that GameStop has made as a partnership with PSA. Once Power Packs as an entity makes enough money, it'll be reported in their financial statements under the equity method. I still don't know what you're talking about. I don't know what the equity method is. Counting approach used when an investor has significant influence over investee, typically owning 20% to 50% of its voting shares, allowing the investor to recognize its share of the investee's profits or losses in its own financial statement. Equity method is applied when an investor can exert significant influence over another company, but does not have full control. Significant influence of... Okay. I don't know. I don't know what that means. Even though I just read it, I don't know what that means. Either they're gonna give you the numbers or they're not. Like I don't know. What's up, Elvis? How you doing, man? I think it was in the last earnings report where they said they weren't going to show the numbers until 2026, and it's now 2026. So they should be showing the numbers. But yeah, we'll see. We'll see. Not too worried about it, to be fair. Look at this piece of shit stock. Look at it. I really don't care. At this point, I don't care. This eBay investment better like 2-3x my share value or market cap value, whatever. That's all that matters to me. What they report, how they report it. At this point, I just do not care, bro. They need to start paying out. Could have made 6 figures just trading already. Wasting my time being an investor, so they better just pay out. Everything else is irrelevant at this point. Well, this sucks. Where the fuck is everyone? What did I do? And everyone's just gone, bro. Dead ass stream again. It's whack. Quite whack. Decent amount of views. Probably because Palo Alto's hot. It's up quite a bit. So the views are doing okay. But where the fuck is everyone? Where's everyone who usually, like, whatever, bro. I'm not even gonna start complaining about it. It's just fucking stupid. Yeah, I'm not gonna react to anything. Just wait for the earnings. Let's be back on the earnings stream grind, because this is what we do when the stream's dead. Just fucking do earnings. I think at a certain point, I'm probably gonna stop talking about GameStop. Honestly, like I'll still talk about it when things are happening, but I might try to transition to talking about other things. But I don't know. We'll see. We'll see. Doesn't seem like it's worth my time to talk about GameStop anymore. What kind of company is that? Palo Alto is, I forget exactly what they do. Software company. Cloud manager. Network security management solution. Prisma Airs to protect customers' entire AI ecosystem. I think it's like a, what do you call it? Cybersecurity? Yeah. It says right here in the news headline, continues to strengthen its position in cybersecurity amidst rising AI demand. I don't really follow this company. Just streamed about it a few times for the earnings. Bitcoin looks interesting. How? It's bearish. How is it interesting when it's bearish? You like investing in bearish things? I bet that's what people were saying at 70K too. You know me, I hate crypto. I think crypto's fucking stupid, but that's not interesting. Far from interesting. Very bearish. Very bearish. You made a new low though. If it goes below 62, that's super bearish. But it looks like trash. Well, this sucks. Like, where the hell is everyone, bro? Stream's always better with a chat, because then I have something to like reference and read off of. With no chat, the stream blows. McDonald's unveils restaurant redesign. Outdoor seating, huh? Has anyone been watching the Lego scandal? That shit's crazy, bro. I didn't know. I didn't know the American American Fork Police were involved. This is all in my own backyard, bro. It's crazy. I guess all the cities in Utah are getting complaints about the American Fork Police Department because of how they're treating Ben in this situation. The police are like covering it up because all these people are Mormon, and it's super interesting. It's super interesting. There's nobody here, so I'm talking to myself, basically, it seems like. New mech shooter from Splitgate devs. Looks like Titanfall fan. Titanfall 2 fans will have new FPS mech shooter to play as Splitgate devs have finally revealed a trailer for their new game. Impulse. Cinematic trailer. Why won't it play? Holy, okay. I just needed to wait a second, but that was loud. I'll watch that later. Okay. I guess we're just gonna fucking sit here until this earnings starts, since there's nobody here. This is stupid. I hate when the stream's like this, bro. It's so annoying. Every time the stream's good, we're having fun, there's people coming in, and then it turns into this. So, whatever. What's up, Break Nation? How you doing, man? Will they hold an earnings call? Yeah. That's why I do these streams, because for the earnings calls. People like to listen to the earnings calls. Sometimes these streams do well. Just depends on the stock. Sometimes nothing happens. Most of the time nothing happens, but sometimes you stream about a popular stock which, you know, Palo Alto should be popular right now. It's like doubled the past 2 months. So it should be pretty popular. But it also depends how many other people are streaming about it. What's up, Isaiah? But, yeah. I just do these earning streams when GameStop's boring, because there's just nothing else to stream about. And I'm not really in the mood to react to anything or anything like that. And I'm probably not going to react to the fucking fake GameStop investor. I don't feel like I should waste my time. Even though you guys all voted for it, I don't want to waste my time on that dude. He's a fucking loser. Of course he makes a video when I'm not even streaming that much. When I'm busy. I got more important stuff to worry about than some loser on the internet talking about me. Do I own stock in Palo Alto? No. I only buy GameStop. I just like listening to other businesses' earnings calls and stuff. Because I'm a real stock person, you know, I'm a real person who's actually interested in business. I actually find this stuff interesting. So I just like to keep updated. And like I said, you know, sometimes these streams do well. So I also like to take advantage of the eyes on the stream. He's just an angry person with zero control over his personal life, so he likes to try to torture people on one to make himself feel better. Oh, well, it doesn't torture me. Like, I don't, whatever that guy does has zero effect on my life. I'll let Palo Alto's up. Who was talking about you? You already know. Why? What? What? You literally already know. Are the numbers out already? That was quick. It's up 1% already. The numbers are really already out? No. Unless they're on the website. Excuse me, sorry. I don't think the numbers are out yet. It's like the only benefit of having Twitter is you do get earnings numbers quick. Because I think a lot of people get it off of Thinkorswim. But obviously I want to actually like read everything on the earnings, not just get an EPS and a revenue. I want to see more info. So I'll just wait till they actually post it. Palo Alto's ripping, though. It's doing well. You've officially doubled in 2 months, which is crazy. Super crazy. I haven't posted the numbers yet, though. Says there's 36 people in here. If you guys see the earnings numbers, post them in the chat. And also hit the like button. I don't think the numbers are out yet, though. Whoops. I'm back. Internet was down. Welcome back. Welcome back. Oh yeah, I gotta make a stream clip. We haven't done an earnings stream clip in a while. We haven't done an earnings stream clip in a while, bro. We gotta hit one real quick. Dude, Palo Alto's up 2%. Wait, why is the chart glitching out? Oh, I should have did it when it's. I don't think the numbers are out yet, though. We gotta wait till the numbers go out. Actually come out, I think. Even people shit talking is potentially more exposure. I mean, if they have a following. I don't know if that dude actually has a following. I'm sure he does, but. Dude, it's up 7%. Holy shit. Dude, Palo Alto's up 8%, 9%, 10%? Dude, I'm getting absolutely wrecked. This thing has doubled in the last 2 months and I've been short the whole time. No! Oh, Palo Alto, no! Oh, those stream clips will never get old. They'll always be funny, I think. They'll always be funny. what is Palo Alto? It's like cybersecurity and cloud management and stuff. Leverage heavy and making shitloads of money. That's chill, bro. That's chill. I think are the numbers out finally? Yeah, they are. Okay, let's see what they got here. Let's show you what they got here. Make sure you guys hit the like button. I do got to get that stream clip out real quick. Let's see. Vertical, yes, nice. I'm getting quick at this now. Uh-oh. It's kind of large. Dude, Wait, what? What happened? Why does it say it's not found? There we go. There we go. That was weird. Palo Alto's up 8%, 9%, 10%? Dude, I'm getting absolutely wrecked. This thing has doubled in the last 2 months and I've been short the whole time. No! Oh, Palo Alto, no! Oh, Palo Alto, no! It's I love those stream clips. They're so funny, bro. They're really dumb, but they're so funny. One sec, I'll read this in a second. One sec, Chad. Give me a second. Just give me a second, Chad. I'm trying to get some things going here, some stuff. All right. Palo Alto Networks, the global cybersecurity leader, announced today financial results for its fiscal third quarter 2026, ended April 30th, 2026. Q3 was a standout quarter for Palo Alto Networks, with accelerating organic bookings growth as customers turn to us to secure their AI deployments at scale, said Nikesh Arora, chairman and chief executive officer of Palo Alto Networks. The latest advancements at the AI frontier have increased the level of urgency around cybersecurity and redefined the shape of the industry for the coming years. Our Q3 results reflect strong growth across each of our platforms. As we scale, we are executing ahead of our M&A integration plans and improving profitability across our businesses, which keeps us firmly on track to achieve 40% adjusted free cash flow margin in fiscal year 28, said Deepak Golecha, Chief Financial Officer of Palo Alto Networks. One sec, gotta get the stream. Wait, did I think I exported it. Yeah, okay. One sec, chat. Make sure you guys hit that like button. It says there's over 50 people in here and we have 7 likes. That's not adding up. That's just not adding up. That's just not adding up. Should have way more likes than that. Especially if you guys want me to keep reading the earnings report. Definitely gotta hit that like button. Okay. 56 people here. People must love this stock. Well, it's doubled the past 2 months, so that's why people are obsessed with it. The last Palo Alto earnings call we did, nobody cared about it. But since it's doubled the last 2 months, you know, people only like stocks that go up. All right. Third quarter fiscal 2026 financial highlights. Total revenue for fiscal third quarter 2026 grew 31% year over year to $3 billion. This includes $388 million from CyberArk and Chronosphere. Next generation security ARR for the fiscal third quarter 2026 grew 60% year over year to $8.1 billion. This includes $1.6 billion in NGS ARR from CyberArk and Chronosphere. Remaining performance obligation grew 36% year over year to $18.4 billion. This includes $1.8 billion from CyberArk and Chronosphere. All right. What you know about CyberArk and Chronosphere? I have no idea how to short a stock, and I wouldn't. You just click sell instead of buy. It's pretty easy, actually. GAAP operating loss for fiscal third quarter 2026 was $183 million, compared with GAAP operating income of $219 million for fiscal third quarter 2025. Non-GAAP operating income for fiscal third quarter 2026 was $814 million, compared with non-GAAP operating income of $627 million for the fiscal third quarter 2025. A reconciliation between GAAP and non-GAAP information is contained in the tables below. GAAP net loss for fiscal third quarter 2026 was $177 million, or negative 0.22 per diluted share, compared with GAAP net income of $262 million, or 0.37 per diluted share, for the fiscal third quarter 2025. Wait, so their income's down? or was it point, or is it not negative? Is it just 0.22? Usually when there's parentheses, it means negative. So maybe they raised a bunch of shares or something. I'm not really sure. Obviously, if some of the Palo Alto investors would type in the chat, maybe I would know, but for some reason, nobody's typing in the chat today. Non-GAAP net income for fiscal third quarter 2026 was $684 million, or 0.85 per diluted share, compared with non-GAAP net income of $561 million, or 0.8 per diluted share for the fiscal third quarter 2025. A reconciliation between GAAP and non-GAAP information is contained in the tables below. Net cash provided by operating activities for fiscal third quarter 2026 was $871 million, compared with net cash provided by operating activities of $628 million for the fiscal third quarter 2025. Adjusted free cash flow for fiscal third quarter 2026 was $910 million, compared with adjusted free cash flow of $578 million for fiscal third quarter 2025. Trailing 12-month adjusted free cash flow margin of 38.5% was up 430 basis points year over year. A reconciliation between GAAP and non-GAAP information is contained in the tables below. Financial outlook. Palo Alto Networks provides guidance based on current market conditions and expectations. For fiscal fourth quarter 2026, we expect next generation security ARR of $8.9 billion to $8.95 billion, representing year-over-year growth of 59 to 60%. Remaining performance obligation of $20.9 billion to $21 billion, representing year-over-year growth of 32 to 33%. Total revenue in the range of $3.345 billion to $3.355 billion, representing year-over-year growth of 32%. Diluted non-GAAP net income per share in range of 0.96 to 0.98, using 830 million to 840 million shares outstanding. For the fiscal year 2026, we expect next generation security ARR of $8.9 billion to $8.95 billion, representing year-over-year growth of 59 to 60%. Remaining performance obligation of $20.9 billion to $21 billion, representing year-over-year growth of 32 to 33%. Didn't we just read this? Total revenue in the range of $11.415 billion to $11.425 billion. Oh, it's for the year. The first one was for fourth quarter. Gotcha. Representing year-over-year growth of 24%. Non-GAAP operating margin in the range of 28.9% to 29.2%. Diluted non-GAAP net income per share in the range of 3.77 to 3.79, using 763 million to 766 million shares outstanding. Wait, why is the fourth quarter one 800 million shares and this one's only 660 or 760? That's confusing. Unless they're doing buybacks, I guess. They could be doing buybacks. Adjusted free cash flow margin to be 37.5%. Okay. Now we wait for the earnings call, I guess. And everyone left. Pretty sick. So stupid, bro. It's like playing Do Not Pass line on the craps table. I just lost the cap to my drink. I'm an idiot, bro. I'm an idiot. I thought I dropped it, but it was just like hanging on the bottle. I thought I felt it drop. Dude, it's up 12%. Holy shit. This thing's crushing, bro. Thanks for streaming. Well, thanks for being here, Stocks8432. Appreciate you stopping in. I've lost my glasses on my face. I've definitely done that before. Surprised there's not more people here for how much it's up. There must be other streamers streaming about it or something. Yep. That guy copies everything I do. Oh, it doesn't show you the numbers on the stream anymore. That's weird. Why doesn't it show you how many viewers there are on the stream anymore? That's very weird. That's actually kind of cool because that means view botting doesn't really work anymore. Is it like that for you guys as well? Can you not see like the amount of viewers that are on the stream before you click on it? That's super weird. That's how it is here. Like, these guys don't have any. Even mine says there's no viewers here. That's super weird. That's a new update. I mean, it's a positive update because that just means view botting doesn't work anymore. But it's very weird. Never seen that before. I mean, it kind of, it tells you how many viewers are in the stream when you click on it, I'm pretty sure, but it's kind of cool that it doesn't tell you before you click on the stream. Not seeing it on mobile either. Interesting. That's awesome. That's a really good update by YouTube. Really good update. Screw the view botters, bro. People who view bot are whack. I wonder how that stream clip's doing. I haven't posted a short in a long time. Oh, it's got 10 views. So stupid, bro. It's actually so dumb. 10 views? Are you kidding? Only 10? How is it only 10? Oh, it's barely starting to get views. Maybe it'll ramp up, but that's whack. Usually it ramps quick with shorts. But I haven't posted a short in a while, so I don't know. I asked my mom to view it too. Well, hello, Stocks8432's mom. Welcome to the stream. The earnings call starts in about 10 minutes. It almost seems like my stream was view botted the past like week or two, bro. The chat is so dead today. It's insane. Like, what happened? It's like the chat was so active for a while and then just randomly died again. I mean, usually when this happens, GameStop tends to react positively. But I don't know. It's just really weird. It's always weird when the chat's like super poppin' and then it's not. I'm trying to. I mean, it shouldn't just be you, You know what I'm saying, bro? Like, it shouldn't just be you typing in here. Like, what happened to everyone? Like, literally. Everyone's gone. It's so odd. It's so odd. What's up, Rosh? What's up, Rosh? Catching up on yesterday's work. I knew Moose was here, but Moose usually doesn't type in chat anyway. Didn't get a notification. Oh, that's whack. So YouTube's not promoting my stream? That's annoying. That's annoying, bro. That's annoying. They probably just made so much on options with Palo Alto. I mean, if you're a Palo Alto investor the past 2 months, you're absolutely crushing. So congrats. Congrats if you're a Palo Alto investor. I usually get them, just refresh YouTube and saw you. Yeah, that's weird, man. I hate when YouTube does that. They should be they should be sending notifications to people who have notifications on. But sometimes they just don't do it. They sold the bag after earnings and don't care about the call anymore. I'm not, I don't expect like random people coming in here for the Palo Alto stream to type in chat, even though they usually do. I'm just wondering, like, where's all the OGs, man? Where's all the OGs? We gotta buy in, Corey. It'll just stay in an $8 cycle forever. Wait, what? I'm not buying Palo Alto. If you didn't buy Palo Alto 2 months ago when it was below 200, it's probably not. I mean, I would never say that it can't keep going up. Of course it can keep going up, but it just doesn't seem like there's any juice. I don't know. It just doesn't. It's like you already doubled the investment if you bought 2 months ago. Do you think it's gonna go to 600 and double again? I don't know. That's tough. That's tough to say. Could. It definitely could. That'd be crazy though. And then you'd be sitting on like a 500 billion market cap. That'd be insane. I thought that about Micron and it doubled 4 times. Yeah, you can never bet against a bullish stock. That's you never fade trend, bro. You never fade trend. That's why most people lose as traders, because they fade the trend. I'm always watching, just using my unlogged YouTube account on my laptop. I appreciate that, Yuku. Appreciate you, bro. Appreciate it. I like Gme because you know what you're getting, $20 to $28. Good point. Good point. Good point. I mean, that's kind of the shitty part about it, but maybe one day it'll break. You never know. Maybe one day. Bought at 323, take me higher. Can you take me higher? This dude's over here singing Creed, bro. He's over here singing Creed as the stock goes up. Can you take me higher? So let's go then. Let's make our escape. I actually like some Creed songs, bro. What If hits hard. I don't know if I've heard. What If. Maybe. I've heard a few Creed songs. I just don't remember. You're scaring away the bulls. That's okay. That's okay. I'm just having fun, bro. Just having fun on my stream. If they don't like it, that sucks for them. Sounded so real. The stream will get clapped. I hope not. It's possible. It's possible. I don't even think you can like do any type of mute, like covers or anything like that anymore. So it might get clapped. It's possible. My Own Prison Rocks. I think I've heard that one. I can't remember. Most of the songs I've heard of Creed are like the album where the dude's like rising from the mud or the sand or whatever it is. Like I've pretty much listened to every song on that album, I'm pretty sure. But as far as like anything else, I don't know if I've listened to it. Corey in a Creed cover band called Greed. Facts. The first time you did it was actually pretty close. Saw Kyle Gass band last night. Half of Tenacious D was awesome. Oh, I know Kyle Gass. Say something more funny. My kid is laughing like crazy. He thinks he thinks Creed is funny. I wish I had something funnier to say. I don't have anything funny to say. Maybe I don't know. Maybe you should just look at the little window in the corner. Maybe he'll just laugh at how I look or something. I don't know. Give What If a shot. I think it was the same album. I've probably listened to it then. The earnings call starts soon. I don't know. So funny, bro. Marvel running on Jensen comment. Marvel? Turn that in your short clip. Never heard about this company. Can you do a quick breakdown? Well, the earnings call starts here in like 2 minutes, so you'll learn more about it here in like 2 minutes, but it's just a cybersecurity cloud management company. I think it's mostly cybersecurity. A little description down here. Cloud manager, network security management, Prisma Airs to protect customers. Yeah, it's just cybersecurity. You'll learn more about it if you listen to the earnings call. Me being here for an earnings call that I care about nothing about is my sacrifice. My sacrifice. Listening to Palo Alto, my sacrifice. I don't know that song. I don't know that song that well. I know that song, but I don't know it like that well. My sacrifice. I should be in a Creed. You're right. I should be in a Creed cover band, bro. Greed. We just wear suits of money and sing Creed songs. We all have dollar bill suits and pimp hats. All right, this earnings call should be starting any minute now. Any second now. Oh, here we go. I think we're in there.
You need
an
AI
ad.
to basically go
An
and defend
ad.
against AI. We have a very strategic partnership with Palo Alto
this?
Networks. It makes a lot of sense to have a platform like Prisma Airs be part of this distributed AI hub framework. Prisma Airs is bringing capabilities like red teaming, model scanning, runtime security, and posture management.
What is going on?
So these are extremely important facets as you're thinking about your AI solution. Palo Alto Networks is one of the top security companies in the world.
It's like an ad.
And
for
Equinix
Palo Alto.
is the interconnection hub. The combination of Prisma Airs and Equinix distributed AI hub is extremely powerful.
I don't like the. I'm probably gonna get clapped for the music. All right, here we go.
Good day, everyone, and welcome to Palo Alto Networks'
Enjoy.
fiscal third quarter 2026 earnings conference call. I am Hamza Fadawala, Senior Vice President of Investor Relations and Strategic Finance. Please note that this call is being recorded today, Tuesday, June 2nd, 2026 at 1:30 p.m. Pacific Time. With me on today's call to discuss our fiscal third quarter results are Nikesh Arora, our Chairman and Chief Executive Officer, and Deepak Galecha, our Chief Financial Officer. Following our prepared remarks, Lee Claridge, our Chief Product and Technology Officer and Board Member, will join us for the question and answer portion. You can find the press release and other information to supplement today's discussion on our website at investors.paloaltonetworks.com. While there, please click on the link for quarterly results to find the Q3 26 supplemental financial information and Q3 26 earnings presentation. During the course of today's call, we will be making forward-looking statements and projections regarding the company's business operations and financial performance, as well as the company's recent acquisitions. These statements made today are subject to a number of risks and uncertainties that could cause our actual results to differ from these forward-looking statements. Please review our press release and recent SEC filings for a description of these risks and uncertainties. We assume no obligation to update any forward-looking statements made in today's presentation. Our presentation also contains non-GAAP financial measures and key metrics relating to the company's past and expected future performance. Non-GAAP financial measures should not be considered a substitute for financial measures made in accordance with GAAP. The most directly comparable GAAP financial metrics and reconciliations are in the press release and the appendix of the investor presentation. Unless otherwise noted, all results and comparisons are on a fiscal year-over-year basis. I will now turn the call over to Nikesh.
Thank you, Hamza. Good afternoon, and thank you everyone for joining us today for our earnings call. As you can see, our Q3 performance was exceptional as we delivered a record quarter. Our results surpassed every guided metric, fueled by an acceleration in organic bookings momentum, the sustained tailwinds from our platformization strategy, and surging cybersecurity needs as AI transitions from experimental stages to enterprise-wide production. Within our core portfolio, we achieved significant traction in network security and XIM, while Prisma AIRS continues to establish itself as the fastest scaling product in our history. Altogether, we delivered $8.13 billion in NGS ARR during the third quarter, representing 60% year-over-year growth. This is our most significant quarterly outperformance to date and surpassed our guidance. Our RPO reached $18.4 billion, up 36% compared to last year, when adjusting for our recent CyberArk and Chronosphere acquisitions, both of which are exceeding expectations in their first quarter post-close. Our organic NGS ARR and RPO rose 28% and 22% respectively. These results are materializing as AI fundamentally redefines the enterprise tech stack, elevating cybersecurity to a mission-critical priority for every organization. Much has been said about Mythos over the last many months. Over the past quarter, frontier AI development reached a critical inflection point. We have entered the era of truly cyber-capable systems where models like Mythos possess the autonomous capability to execute comprehensive attack campaigns from start to finish. This represents a fundamental paradigm shift for the cybersecurity industry. The most critical factor in this transition is speed. When weaponized by adversaries, these frontier models can identify and weaponize vulnerabilities in mere minutes, a process that previously required months of manual effort. Earlier this year, our Unit 42 researchers demonstrated the acceleration by simulating a comprehensive ransomware campaign from initial entry to data exfiltration in just 25 minutes. In contrast, the typical enterprise still requires days to identify a breach. These existing latency gaps are already a concern, but the emergence of these latest models makes them completely unsustainable. We believe this is merely the opening act. As frontier AI development continues to accelerate, we anticipate a 3 to 6 month window before these systems evolve into more sophisticated hacking entities globally. Within a few years, we expect agentic AI to reach a level of autonomous execution that is truly unprecedented, scanning environments, generating bespoke exploits, and orchestrating end-to-end campaigns at machine speed without human intervention. That is a trajectory of the modern threat landscape. However, the same technological leap provides a powerful defensive advantage. We validated this potential during the quarter. Leveraging our strategic partnerships with leading frontier labs, we utilized early access to their most advanced models to complete the equivalent of a year's worth of pen testing in less than 3 weeks. This unique vantage point allowed us to introduce Unit 42 Frontier AI Defense, enabling our customers to fortify their environments against AI-driven attacks. Market reception has been exceptional. With north of 1,200 customers asking to meet us, we have already completed 800 meetings in the last 6 weeks to help our customers think through their cybersecurity future. These meetings are driving conversations across the platform. In fact, we're already seeing strong interest in our agentic endpoint security offering since the acquisition of Koi, and have already generated interest for over 150 customers. This is critical for securing rising AI coding tools and agents as they proliferate our endpoints. While identifying vulnerabilities is a critical first step, true mission-critical protection is achieved at runtime. Real-time, inline defense is the only way to shield even unpatched infrastructure as an attack sequence unfolds. This is where the cybersecurity battle will be won or lost. Countering the next generation of adversaries requires a comprehensive architectural vision that goes far beyond simple large language models. While the capabilities of these frontier systems are impressive, they're not a silver bullet for cybersecurity. We currently see 2 major structural challenges. First, the prevalence of false positives, with error rates often reaching 25%, forcing manual intervention that destroys the speed advantage of automation. Second, these models always fail at the last mile of complexity, leaving critical gaps in remediation and vulnerability management. In today's threat landscape, The most subtle 1% of novel attack techniques are what lead to the most devastating breaches. For every enterprise, the defensive bar must be perfect, while an attacker only needs to succeed once. The probabilistic nature of even the most advanced systems leads to inaccuracies. And in a mission-critical environment, the cost of a false positive is simply too high. One wrong enforcement decision can take down a global production network. Just as autonomous vehicles require constant real-time validation, an automated defense must be built on high-fidelity telemetry and battle-tested against every edge case to be mission-ready. An AI model is only as effective as the data it can see. As frontier models become available to everyone, the real competitive advantage shifts from model to the data fuel. That is why having sensors that sit in line with live traffic is so vital. They provide the telemetry and context needed to outmaneuver bad actors while serving as a critical enforcement point. The logic is simple. The more you integrate, the more you see, the more data you unify. The better the AI performs, the more you inspect at runtime, the faster you can stop an attack. Our global footprint now exceeds 125 million sensors across network, endpoint, and cloud, ingesting over 17 petabytes of daily telemetry. This scale creates a powerful flywheel. Every new sensor makes our entire platform more intelligent, which leads to more deployments, more data, and even stronger real-time protection. This reality is why platformization is the only sustainable answer. The legacy approach of query-based tools that wait for human reaction cannot keep up with machine speed threats. We're transforming the industry by consolidating data onto a single platform, reducing breach response times from days to minutes through AI-driven pre-analysis. Point products that silo data and increase latency are becoming obsolete. As the battle moves to fighting AI with AI, we believe Palo Alto Networks is in pole position, and our Q3 results prove that momentum. As AI compresses attack timelines, only a platform that gets smarter with scale can respond fast enough. During the third quarter, we secured 110 net new platformizations, a figure that includes 20 from our CyberArk and Chronosphere integrations. These strategic additions expand our reach into large addressable markets within identity and observability. Given the fragmented nature of these sectors, they're perfectly aligned with our overarching platformization vision. We concluded Q3 with roughly 2,280 total platformized customers, bolstered by the inclusion of our latest acquisitions. These engagements represent deep architectural commitments rather than simple transactions. When organizations reach this integration milestone, they standardize their infrastructure on our platform, yielding superior long-term retention expansion. This is reflected in our 120% net retention and single-digit churn rates amongst this cohort. Moving forward, we remain confident in surpassing 4,000 platformizations by fiscal 2030, providing the primary momentum towards our $20 billion target for NGS ARR. The scale and quality of our customer wins this quarter reflect how strategic these platform commitments have become, and how customers are increasingly bringing us in to secure their production AI deployments to scale. Let me share a few examples. In Q3, we surpassed $200 million in ARR with a leading frontier AI lab that relies on us for observability across its most demanding training and inference clusters. We expect that to continue to grow again next quarter as they complete their migration to Chronosphere. One of our largest Q3 deals was an $80 million transaction with a leading power producer in the United States, an organization at the center of the AI infrastructure expansion. They selected our next-generation firewalls and also adopted SASE to secure a distributed workforce over 25,000 employees. A global consulting leader signed a deal for over $20 million, selecting Prisma AIRS, our AI security platform, to secure its rapidly growing fleet of AI apps and agents, now running more than 2 trillion tokens per month on our platform. This was an existing platformized customer who spent several months working closely with us to secure this entirely new frontier. It was also a record Prisma AIRS win and speaks to how customers partners with us for the AI transformation journey. As AI raises the stake, these deals further validate our position as a cybersecurity partner of choice. That was particularly notable in our network security business, where we had our strongest Q3 in several years. Our largest business unit, network security, delivered its most robust third quarter performance in years. This momentum underscores the mission-critical role of real-time network traffic inspection as enterprise-wide AI initiatives continue to transition to production. We saw strong growth in hardware, SASE, and software firewalls during the period. While we're in the early innings, we anticipate that AI will serve as a structural catalyst for deeper traffic inspection requirements. The initial phase of AI adoption was primarily conversational, but the shift towards agentic AI represents a fundamental change. Unlike simple chatbots, autonomous agents trigger a massive volume of secondary machine-to-machine interactions, consistently accessing tools and data to to complete complex workflows. This creates a surge in non-stop, high-volume traffic that must be secured at runtime. This evolution directly translates into heightened demand for high-throughput hardware, expanded cloud-based software capacity, and the necessity for unified policy enforcement across the entire platform. Our Q3 results featured the strongest hardware performance in a decade, with next-generation firewall booking rising nearly 40% year-over-year. This was supported by our latest Gen 5 appliances in early access and AI data center buildouts. We're seeing early adoption from a new class of buyers, including sovereign infrastructure providers and AI labs, representing a significant new market as deployments move beyond traditional hyperscalers. A key differentiator for our hardware portfolio remains the strength of our subscription attach, illustrating how customers are standardizing the security stack on our platform. Within our installed base, we currently average more than 4 subscriptions per device. Our innovation engine continues to expand this opportunity. We now provide 11 advanced subscriptions, including our next-generation trusted security, which utilizes CyberArk certificate management to address emerging compliance standards for shorter certificate lifespans. Palo Alto Networks remains the fastest-growing provider in the SASE market. In Q3, SASE ARR reached $1.6 billion, growing 40% year-over-year as customers prioritize unified protection across hybrid workforces and AI applications. Competitive momentum remains high, with nearly 50 displacement wins totaling $200 million in contract value year-to-date. Secure Browser also achieved a major milestone, scaling to 11 million licenses, a four-fold increase that cements its status as a critical control point for the AI enterprise. Furthermore, software firewalls remain a high-growth pillar of our strategy. ARR rose 25% in Q3, accelerating as organizations expanded their capacity to inspect growing traffic between cloud and AI workloads. As these environments scale, the requirements for high-fidelity telemetry only increases. The common architectural approach is driving increased customer growth in Prisma AIRS, which continues to be the fastest-growing product in our history. Organizations are aggressively moving beyond the experimental phase, deploying AI agents and applications into production. This transition creates entirely new mission-critical security demands. We believe we are the first in the industry to embrace AI security platformization. Yes, AI security platformization, capable of securing and monitoring AI end-to-end. We have effectively doubled our capabilities in this space in just over 9 months. Our journey began with securing models and runtime defense. We then integrated identity security to govern agent access and observability to trace agent behavior across complex infrastructure. Most recently, we expanded to agentic endpoint security as AI tools proliferate across the edge. Our recent acquisition of Quartly marks yet another strategic milestone. As a leading AI gateway processing trillions of tokens monthly, Quartly provides a critical enforcement point to monitor every request to apply real-time policy to agent interactions at scale. This relentless innovation has established Prisma AIRS as our fastest-growing product ever. We reached over 300 customers in Q3, tripling our Q2 count, and have clear visibility towards $100 million in ARR within the next couple of quarters for a product that was not in the market 1 year ago. Ultimately, securing the AI enterprise generates a massive volume of runtime telemetry. The data is only actionable if processed at machine speed, which is a core mission of our Cortex platform. XSIAM remains our primary response to the emerging frontier model threat. As attack cycles compress to machine speed, organizations can no longer rely on legacy query-based architectures or manual dashboards. Effectively countering AI necessitates a defensive strategy powered by AI. Upon the introduction of XSIAM 42 months ago, we entered the sector as a disruptive innovator, engineering our platform from the ground up to redefine security ops centers. Today, our platform processes more than 17 petabytes of daily telemetry, a volume unmatched by any other pure-play security vendor. We ended the third quarter with more than $600 million in ARR, representing a 100% year-over-year increase across a growing base of 740 customers. The most significant metric, however, is the outcome. The majority of our customers are now responding to threats in under 10 minutes. This is a dramatic reduction from the days or weeks previously required and serves as a blueprint for the modern SOC. In observability, our Q3 performance was well above our initial expectations. As AI initiatives generate a surge in telemetry, Chronosphere is a purpose-built capability to scale alongside these workloads. Our observability ARR surpassed $300 million this quarter, nearly doubling since our acquisition announcement last autumn. Furthermore, 80% of our net new customer acquisition this year adopted multiple products, reinforcing our platformization momentum. The world's leading AI natives, including 2 of the top 5 frontier labs, have adopted Chronosphere, validating our ability to provide observability at AI scale. Beyond our early investments in markets where AI would drive a positive inflection, we also recognized early where AI would overhaul existing security categories. Consider posture management. Traditional periodic scanning is insufficient when attack timelines are measured in minutes. As a result, we proactively transitioned our cloud portfolio from static posture to real-time detection through Cortex Cloud. We're making steady progress and anticipate most Prisma customers will be migrated to Cortex Cloud by the end of the fiscal year. Now, as these agents proliferate, every autonomous entity represents a new identity that must be managed, which leads directly to our progress with CyberArk. In our inaugural quarter post-close, CyberArk has surpassed our internal benchmarks as we move to execute our unified vision for identity security. Last month, we launched Idera, our next-generation identity platform for the AI-driven enterprise. For years, the industry operated under the IAM fallacy, the belief that you only needed to secure a handful of privileged administrators. In the era of agentic AI, that distinction has vanished. Every identity, whether human, machine, or software agent, now possesses the potential to access the sensitive systems at machine speed. Idera addresses this shift by democratizing modern PAM controls across all users and extending protection to agentic identities, which represent the primary attack vector of the future. Our execution in Q3 was strong. Joint go-to-market efforts have already initiated approximately 1,000 cross-org engagements. We have sustained CyberArk's growth trajectory while improving its profitability profile through our integration initiatives. Given our rapid progress, we're now 3 to 6 months ahead of our original timeline for converging CyberArk's profitability with our own, a milestone we expect to reach within the next 12 to 18 months. This acceleration reinforces our path towards a 40% free cash flow margin in fiscal 2028, which Deepak will talk about more. The events of the third quarter represent a watershed moment for cybersecurity and has elevated our category even higher on the CIO priority list. Mark my words, Mythos has increased the terminal value of the entire cybersecurity industry. We are identifying several structural catalysts from the AI cycle driving growth across our platform. First, AI creates a massive surge in traffic and connection points requiring real-time inspection. As agents trigger hundreds of secondary actions, network security becomes the indispensable foundation for safe AI adoption. Second, countering machine speed adversaries requires real-time automated defense. This is a core mission of XIM, consolidating data onto a single platform so AI can respond to threats in minutes rather than days. And third, in an environment populated by both humans and agents, identity serves as a primary defensive layer. When autonomous entities can execute actions independently, securing access via Idera becomes mission critical. The convergence of these trends validates our platformization strategy. Managing fragmented data and siloed point products is no longer viable in an AI-driven landscape. A unified platform that gains intelligence with scale is the only path forward. While we're still in the early stages of this shift, we remain committed to innovating ahead of the threat landscape and earning our customers' trust every day. I will now turn the call over to Deepak to discuss our financial results in greater detail.
Thank you, Nikesh, and good afternoon, everyone. We delivered a record Q3 with broad-based demand across our platforms and geographies. We exceeded our guidance ranges across the board, driven by an acceleration in organic bookings growth and outperformance from our recent acquisitions as we made early progress on our integration efforts. Please note that during my remarks, I will discuss results with and without the impact of Chronosphere and CyberArk. The financial impact of our acquisition of Koi, which closed later in the quarter, was immaterial to our Q3 results. Starting with next-generation security ARR, we delivered 60% year-over-year growth in Q3, reaching $8.13 billion. This included $1.63 billion from CyberArk and Chronosphere. We surpassed $300 million in ARR for Chronosphere, our next-generation observability platform. That was an over 50% increase from Q2 and far exceeded our expectations, driven by an existing LLM customer increasing consumption as they continue to migrate from an incumbent vendor. Excluding the impact of CyberArk and Chronosphere, NGS ARR was $6.5 billion, up 28% year-over-year, and net new NGS ARR was $370 million, up 18% year-over-year. Please note that this excludes ARR attached to our hardware backlog that also reached record levels for a Q3 quarter. We saw notable strength in network security, which is our largest segment and accounts for approximately 70% of our total revenue. All NetSec form factors delivered sustained or accelerating growth in Q3. In SASE, ARR reached $1.6 billion, up 40% year over year, more than 2 times the overall market growth rate. We have seen a nearly 50% increase in SASE net new NGS ARR over the trailing 12 months, driven by continued scale, strong performance in net new logos, and displacement wins. Software firewall showed strength once again this quarter, with ARR up 25% year over year, driven in part by the increase in Prisma AIRS in firewall flex deals. As Nikesh highlighted, Prisma AIRS continues to be our fastest growing product ever. We have over 300 Prisma AIRS customers as of Q3, up from just 100 at the end of Q2. As AI adoption grows in the enterprise, we believe AIRS is becoming a foundational infrastructure for secure AI deployment. Turning to remaining performance obligation, or RPO, we ended the quarter at $18.4 billion, growing 36% year over year. Excluding $1.8 billion from CyberArk and Chronosphere, RPO grew 22% year over year, which we believe is a direct result of our platformization strategy, driving deeper customer commitments across our platforms. Current RPO was $8.3 billion, up 34% year over year. Excluding the impact from CyberArk and Chronosphere, current RPO was $7.2 billion and grew 17% year over year, an acceleration versus 15% in Q2. Total revenue for the quarter was $3 billion, growing 31% year over year. Product revenue was $594 million, and total services revenue was $2.4 billion, both growing 31% year over year. As I've highlighted in previous quarters, software and recurring revenue now represent a large and growing portion of this line item. Today, product revenue includes major growth drivers, including software firewalls and Prisma AIRS, SD-WAN, and self-hosted identity security subscriptions. As a result, 46% of our trailing 12-month product revenue in Q3 included recurring software revenue, a significant increase from just 22% 3 years ago. Hardware, which is approximately 10% of our total revenue, delivered its best quarter in a decade, fueled by strong demand for our next-generation firewalls, and we saw early AI data wins contributing to record Q3 backlog. Our next-generation firewall bookings grew nearly 40% year over year in Q3 as we continue to gain share. AI data centers and AI-driven enterprise networking needs are driving a new market opportunity for us, which could potentially be additive to our long-term growth for firewall appliances. From a geographic perspective, we saw broad-based growth across all of our major theaters, with the Americas growing 32% year over year, EMEA up 32% year over year, and JAPAC growing 26% year over year. Moving down the P&L, our Q3 strength was not confined simply to our top-line metrics as we continue to drive profitable growth across the P&L and executed against our M&A integration strategy. Total gross margin for the quarter was 75.8%. This included services gross margin of 75.1%. We continue to balance services gross margins by driving efficiencies in cloud hosting, while the mix shift of our high-growth SaaS offerings increases. Within this, product gross margin was at 78.8%, which was a 40 basis point improvement year over year. Turning to the supply chain, we are closely monitoring rising component costs, particularly in memory and storage. Please note that we have approximately 1 million firewalls in the field, and our required component volumes are not as significant as some of our peers. Furthermore, we remain well-positioned to navigate these dynamics for the following reasons. First, our higher recurring revenue mix acts as a natural hedge. Hardware today accounts for approximately 10% of our total revenue, compared to 20% in fiscal year 2021. Second, our vendors view us as critical infrastructure provider, and we have a track record of leveraging our prior supply chain experience and expertise to mitigate these impacts. This includes evaluating alternative sources of supply, extending purchase commitments with our suppliers. Thirdly, we continue to evaluate further pricing actions. As a reminder, we implemented a 10% price increase on hardware in early April. The impact of pricing and rising component costs are reflected in our Q4 and fiscal 2026 outlook. These dynamics, paired with the continued operating efficiency, resulted in non-GAAP operating margin of 21.3% in Q3, flat versus Q3 of 25. Looking forward, we expect to drive operating leverage as we scale and continue to make progress against our M&A integration plans. In Q3, we made a lot of progress on our integration plans. This was driven by strong execution and collaboration by our teams across every function, including our new colleagues from our recent acquisitions who have truly risen to the occasion. This is already driving tangible results. Our integration philosophy starts with product and our relentless focus on driving innovation. Just months after closing the CyberArk transaction, we introduced Idera, our next-generation identity security platform. This includes the key innovations Nikesh highlighted, including modern PAM and agentic identity security integrated with Prisma AIRS, as well as deeper integration of identity signals with our core NetSec and Cortex platforms. Early go-to-market collaboration has also been encouraging, with more than 1,000 cross-organization engagements initiated between the core and identity sales organizations to date. On the expense side, we're leveraging our combined scale to drive improved cloud hosting economics for the acquired CyberArk business. Post-close, we're optimizing our organizations to deliver a unified one-team culture that is future-ready. We are carefully reviewing every single line item across each of our financial statements to drive operating leverage across vendors and functions. This includes streamlining our combined real estate footprint, which includes over 40 new facilities from our acquisitions, to enhancing and fostering collaboration post-close. Additionally, we're optimizing our marketing and our IT vendor footprint. To date, we have identified more than 300 IT vendors to streamline and have already dispositioned approximately 20%. All of these factors combined will enable us to hit our CyberArk synergy targets about 3 to 6 months earlier than we initially anticipated. This visibility, paired with our continued operating leverage across the overall company, reinforces our confidence in reaching 40% free cash flow margin in fiscal 28. In Q3, we generated adjusted free cash flow of $910 million, a 57% increase year over year. On a trailing 12-month basis, we generated $4.08 billion in adjusted non-GAAP free cash flow. This represents a margin of 38.5%, a 430 basis point improvement year over year, even with the inclusion of CyberArk and Chronosphere. We will, of course, have a full year of CyberArk and Chronosphere expenses next year, but these results solidify our continued ability to deliver best-in-class free cash flow margin and enabled us to raise our fiscal 26 guidance. The strong cash flow generation supports our opportunistic share repurchase program. During Q3, we utilized $1 billion to buy back 6.8 million shares at an average cost of $147.69. We currently maintain $1 billion in remaining capacity under our existing repurchase authorization. Moving to the non-GAAP items, stock-based compensation increased sequentially to 17% of revenue in Q3, primarily driven by SBC related to our recent acquisitions. While M&A-related SBC will continue to be amortized in future quarters, we expect stock-based compensation as a percentage of revenue to return to pre-acquisition levels on a run rate basis in approximately 12 to 18 months. Beyond stock-based compensation, our GAAP results also reflect transaction and integration costs from these acquisitions, further detailed in our SFI. These non-recurring charges resulted in a GAAP net loss per share of 22 cents for the quarter. Our diluted non-GAAP EPS, which adjusts for SBC and one-time items, reached 85 cents, which came in 5 cents above the high end of our Q3 guidance. Reflecting on my 5 years in the seat, I've always maintained that our business model scales well across every line item of our P&L. This financial framework is precisely what allows us to execute our broader corporate strategy from a position of strength. When you look at our M&A trajectory, we initially proved this execution capability by integrating over 20 tuck-in acquisitions to build out our platforms. Today, we are successfully integrating larger, highly strategic acquisitions, all while driving durable growth and balancing against our profitability commitments. Now turning to guidance. Given the acceleration in our Q3 organic bookings growth, our early progress on M&A integration, and the strong Q4 pipeline, we are raising our full-year fiscal 2026 guidance across all metrics for both our core and acquired businesses. This quarter and last, we provided a breakout of performance for both our core business and our recent acquisitions. Our intention was always to make this a one-time in nature and move our disclosures closer in line to how we run the business. Therefore, we'll be moving to total company guidance moving forward. Beginning in fiscal 2027, we intend to provide segment-level revenue disclosures across network security, Cortex, and identity. This will align our reporting with how we run the business and our platform strategy post-integration. Now let me take you through guidance in detail. For the fourth quarter 2026, we expect NGS ARR of $8.9 billion to $8.95 billion, or 59% to 60% growth. We expect RPO of $20.9 to $21 billion, or 32% to 33% growth. And we expect revenue of $3.345 billion to $3.355 billion, or 32% growth. Fully diluted share count of 830 to 840 million shares, diluted non-GAAP EPS to be in the range of 96 to 98 cents. For the fiscal year 2026, we expect NGS ARR of $8.9 billion to $8.95 billion, or 59% to 60% growth. We expect RPO of $20.9 to $21 billion, or 32% to 33% growth. We expect revenue of $11.415 billion to $11.425 billion, or 24% growth. Operating margins to be in the range of 28.9% to 29.2%. Diluted non-GAAP EPS to be in the range of $3.77 to $3.79. Fully diluted share count of 763 to 766 million shares, and adjusted free cash flow margin of 37.5%. We've included our typical modeling points in the presentation for your review. And with that, I will turn it back over to Hamza for Q&A.
I'm making you guys wait, by the way.
Thank you, Deepak.
You guys only come here when the stock price is up or there's news. I'm making you wait.
One question. First question goes to Saket Kalia from Barclays, followed by Brian Essex from JP Morgan.
Okay, can you guys hear me?
Yes, we can hear you.
Okay, excellent. I have a little trouble with the video, but I'll ask the question. Guys, thank you so much for taking my question here, and congrats to the team on the results and the guide. Nikesh, maybe for you, there's tons to talk about, but I'd love to dig into your network security business just a little bit more, since you mentioned a potential multi-year tailwind there. Maybe the question is, can you talk about how much AI data center demand is contributing to that? And outside of AI data center builds, how are your other customers thinking about their network security needs as AI traffic grows?
Thanks, Saket. First of all, I thought you were going to ask me about the 40% free cash flow question you mentioned on CNBC, but anyway, we'll save that one for
That speaks for itself.
Okay. Look, you saw across the board, we've always maintained that as more traffic traverses networks, more inspection is needed. When more inspection is needed, hardware is the cheapest and fastest throughput mechanism to inspect the data. I think the multi-year tailwind will come from the fact that more and more data needs to be stored both by organizations, needs to be used for training all these frontier labs out there. And you can see the explosion of data centers being built, whether it's by hyperscalers, frontier labs, or neoclouds out there. And you're seeing that demand fall through to some of the hardware vendors in the space. I think couple that with the scarcity and component pricing, you're seeing some price increases. You're seeing some of that mixture of price uplift as well as demand uplift. But I think, maybe the number's gone from 5 to 8 to 10 to 12%. So that's a 50% increase in demand for the industry, I think. I think you'll see that. And I think you'll tell me before I can tell you when data center growth starts to taper off or plateau, this thing is going to come to roost. But I expect that this trend should continue for the next few quarters, if not few years. Lee, did you want to answer? No, Lee thinks I gave a good answer.
Very helpful. Thank you.
All right. Thank you, Saket. Next, we'll go to Brian Essex from JP Morgan, followed by Matthew Hedberg from RBC.
Yeah, thanks, Hamza, and congrats on the results, guys. Great. Thank you for taking the question. Hey, Nikesh, I'd love to ask you about Prisma Airs. Great to see the traction there, and would love to understand from a customer perspective. One of the things I thought was very important that you mentioned was the ability for a platform to have more effective speed or mean time to detection and response. How are your customers evaluating that as they look at kind of the elevated threat environment they have? Following the emergence of like Mythos and GPT and Glasswing, Project Glasswing announcement.
So let's do a double team with this. I'm gonna start off, then I'll have Lee talk about some of the capabilities that are needed in the AI future. Look, one of the things which we have done, as many of you know, over the last many years, we actually built native VM capability in many of the hyperscalers. Now you're seeing that is where a lot of the models are being hosted, a lot of the AI artifacts are sitting for customers, because AI is not an on-prem event. It's typically a cloud event, hyperscaler event. And the fact that we have native firewalls sitting in those hyperscalers allow us to inspect traffic, not just regular cloud traffic, but also AI traffic. I'm going to have Lee talk about all the capabilities we built in Prisma Airs in the last 12 months, which have allowed us to provide all the security capabilities that AI needs.
Yeah, so there's like every cybersecurity sort of space, I'll call it, there's an end-to-end component. There's what's sort of shift left, which is even before you deploy AI and what you do in terms of model scanning and AI red teaming and validating the application itself and the AI usage of that, all the way through the runtime components, which are sort of very focused on real-time threats, how to detect and prevent them. And then all of that also becomes a feed into the SOC, and the SOC has to be able to ingest data from all of these different sensors, analyze it in real time using AI, and then apply automation in order to achieve the mean time remediation that Nikesh was talking about earlier in prepared remarks, where we can't be operating in a model where sort of legacy model of mean time to detection of days, when attackers, particularly with these new models, are able to carry out attacks start to finish in tens of minutes. And so they're the feed into XSIAM, the amount of data that XSIAM can ingest, speed of processing, AI, automation, and response, that ability to prove to customers of all the rest that have already been deployed that we can achieve MTTR in minutes is a very powerful proof point for them of believing that they will be able to achieve the same outcomes as well.
Great, thank you. I'll leave my follow-up for later, but thank you.
All right, thank you, Brian. Next, we'll go to Matt Hedberg from RBC, followed by Meta Marshall from Morgan Stanley.
Great, guys. Very impressive results, to say the least. I guess, within your observability platform, the 200 million AI Frontier Lab customer, 100 million of net new ARR added this quarter, super impressive. Yeah, I guess, can you talk about how observability and security is converging and how that positions you really to take share versus competitors that, primarily start with an observability first solution?
Yeah, Matt, I think first of all, it's important to note that these are each specialized environments. So meaning you have to be really, really good at observability, regardless of any potential integration with security. And the same is true with security. And I start there because if you look at all of the previous attempts to try to expand from one to the other, what you saw was perhaps a strength in one, but then trying to apply the same logic to the other. You can't take an observability platform, just add a little bit, and all of a sudden say that it's a good security platform, and vice versa. And so I say that because it's very important. XSIAM is best in class in what it does, and we've proven that. Chronosphere, from observability perspective, is best in class, and we've proven that. And in both cases, we have very strong roadmaps of capabilities that we'll continue to add to them. What you'll see over time going forward is data collected for the observability use case will be valuable as a sensor to the security use case, meaning XSIAM will start to leverage that data to expand the data it can analyze for security purposes. And importantly, vice versa, data collected for the security use case will be valuable to having additional context, broader context for the observability use case. So the first part is the the data that is collected for each of these independent use cases starts to cross-pollinate to the other. The second part is really related to agentics. And what you're seeing across these spaces is a need for AI-driven automated response. And agentics, we believe, is that foundation that will be leveraged across all of our platforms, obviously starting with Cortex and expanding to Chronosphere. And so agentics becomes the other key point where you'll start to see increased integration across the observability and security space from us. But again, in both cases, this is starting from a position of strength independently, and the cross-pollination adds to those capabilities.
Super helpful. Thanks, Lee.
Thank you, Matt. Next, we'll go to Meta Marshall from Morgan Stanley, followed by Shaul Eyal from Cowen.
Great, thanks. Maybe the question for me is just building on the $200 million opportunity that you guys had with the Frontier Lab. How does that change how you're thinking about the opportunity with the AI native? And just can you give a sense of the breadth of the platform that they were kind of buying within that deal?
I'll be honest, chat. I'm over this.
Well, look,
Sorry to the people who are here for the Palo Alto earnings, but I'm over it. I want to read about GameStop. I want to talk about GameStop. So, appreciate anyone who's here for the Palo Alto earnings, but we got to cut it short. There's more important things to talk about. There's more important things to talk about. I got to throw this away first, though. I think Break Nation's right. I think we got to whip out the Bible first, though. I think we got to get some people to leave. Should we whip out the Bible real quick? I think we need I think we need to do some reading. We need to get rid of some people. I think we got to get rid of some people, bro. I think we got to get rid of some people. And you know the best way to get rid of some people? You know the best way to get rid of people? You read some nice, delicious Bible, and people will get so upset. They'll get so upset because they can't handle it. They can't handle it. They just can't handle it, bro. They don't like the truth. They don't like the truth. Should we read the Sermon on the Mount? And seeing the multitudes, he went up into a mountain, and when he was set, his disciples came unto him, and he opened his mouth, and taught them, saying, Blessed are the poor in spirit, for theirs is the kingdom of heaven. Blessed are they that mourn, for they shall be comforted. Blessed are the meek, for they shall inherit the earth. Blessed are they which do hunger and thirst after righteousness, for they shall be filled. Blessed are the merciful, for they shall obtain mercy. Blessed are the pure in heart, for they shall see God. Blessed are the peacemakers, for they shall be called the children of God. Blessed are they which are persecuted for righteousness' sake, for theirs is the kingdom of heaven. Blessed are ye, when men shall rival you, and persecute you, and shall say all manner of evil against you falsely, for my sake. Rejoice, and be exceedingly glad, for great is your reward in heaven. For so persecuted that they the prophets which were before you. Ye are the salt of the earth, but if the salt have lost his savor, wherewith shall it be salted? It is thenceforth good for nothing, but to be cast out, and to be trodden under the foot of men. Ye are the light of the world. A city that is set on a hill that cannot be hid. Neither do men light a candle, and put it under bushel, but on a candlestick, and it giveth light unto all that are in the house. Let your light so shine before men, that they may see your good works, and glorify your Father which is in heaven. Think not that I am come to destroy the law, or the prophets. I am not come to destroy, but to fulfill. For verily I say unto you, till heaven and earth pass, one jot or one tittle shall in no wise pass from the law, till all be fulfilled. Whosoever therefore shall break one of these least commandments, and shall teach men so, he shall be called the least in the kingdom of heaven. But whoever shall do and teach them, the same shall be called great into the kingdom of heaven. For I say unto you, that except your righteousness shall exceed the righteousness of the scribes and the Pharisees, ye shall in no case enter into the kingdom of heaven. Woo! Chat! We're spinning some heat right now, chat. You guys need this. You guys need this, bro. You guys get too excited that the stock price is up and some news is out. You guys need some God in your life, bro. Break Nation! Break Nation! With the 5 gifted members, let's go! Woo! Let's go, Break Nation, let's go! Do you guys want more? You guys want more? I think you guys might need a little more. You guys want more? Deja vu! Deja vu with the 5 gifted, let's go! Deja vu! Hey, I appreciate you guys. Thank you, Break Nation. Thank you, Deja vu. Thank you, Deja vu. Appreciate you, bro. Been like 2 years since the Bible was read. I have 10 minutes. 10 minutes. 10 minutes. We gotta read at least one more verse. One more verse. One more verse. We gotta get something good. We need something good here. We need something good here. Something good, nice and short. Something good. Let's see. Ooh. Oh, I skipped over a bunch. We gotta go back. I skipped over what I wanted to read, I think. Give me something that'll awaken my spirit. I'll try. Ah, here you go. This is what we're looking for. True wisdom, chat. True wisdom. No man can serve 2 masters, for either he will hate the one and love the other, or else he will hold to the one and despise the other. You cannot serve God and mammon. Therefore I say unto you, take no thought for your life, what you shall eat, what you shall drink, nor yet for your body, what you shall put on. Is not the life more than meat, and the body more than raiment? Behold the fowls of the air, for they sow not, neither do they reap, nor gather into barns, yet your heavenly Father feedeth them. Are you not much better than they? Which of you by taking thought can add 1 cubit unto his stature? And why take your thought for raiment? Consider the lilies of the field, how they grow. They toil not, neither do they spin. And yet I say unto you, that even Solomon in all his glory was not arrayed like one of these. Wherefore, if God so clothe the grass of the field, which today is, and tomorrow is cast into the oven, shall he not much more clothe you? O ye have little faith! Therefore take no thought, saying, what shall we eat? Or what shall we drink? Or wherewithal shall we be clothed? For after all these things do the Gentiles seek. For your heavenly Father knoweth that ye have need of all these things. But seek ye first the kingdom of God, and his righteousness, and all these things shall be added unto you. Take therefore no thought for tomorrow, for the morrow shall take thought for things of itself. Sufficient unto the day is the evil thereof. Judge not, that ye be not judged, for with what judgment ye judge, you shall be judged, and with what measure you met, it shall be measured to you again. And why beholdest thou the mote that is in thy brother's eye, but considerest not the beam that is in thine own eye? How wilt thou say to thy brother, let me pull out the mote of thine eye, and behold, a beam is in thine own eye? Thou hypocrite! First cast out the beam of thine own eye, and then shalt thou see clearly to cast out the mote of thy brother's eye. Give not which is holy unto the dogs, neither cast ye your pearls before swine, lest they trample them under their feet, and turn again and rend you. Ask, and it shall be given. Seek, and you shall find. Knock, and it shall be opened unto you. For everyone that asks receiveth, and if he that seeketh findeth, and to him that knock it shall be opened. Or what man is there of you, whom his son ask bread, will he give him a stone? Or if he ask a fish, will he give him a serpent? If you then, being evil, know how to give good gifts unto your children, how much more shall your Father which is in heaven give good things to them that ask him? Therefore all things whatsoever you would that men should do to you, do you even so to them, for this is the law and the prophets. Enter in at the strait gate, for wide is the gate, and broad is the way that lead to destruction, and many there be which go into threat. Because strait is the gate, and narrow is the way, which leadeth unto life, and few there be that find it. Beware of false prophets, which come to you in sheep's clothing, but inwardly they are ravening wolves. You shall know them by their fruits. Do men gather grapes of thorns or figs of thistles? Even so every good tree bringeth forth good fruit, but a corrupt tree bring forth evil fruit. A good tree cannot bring forth evil fruit, neither can a corrupt tree bring forth good fruit. Every tree that bringeth not forth good fruit is hewn down, and cast into the fire. Wherefore by their fruits you shall know them. Not everyone that saith unto me, Lord, Lord, shall enter into the kingdom of heaven, but he that do the will of my Father which is in heaven. Many will say to me in that day, Lord, Lord, have we not prophesied in thy name, and in thy name cast out demons, and in thy name done many wonderful works? And then will I profess unto them, I never knew you. Depart from me, ye that work iniquity. Therefore, whoever heareth these sayings of mine, and doeth them, I will liken him unto a wise man, which built his house upon a rock. And the rain descended, and the floods came, and the winds blew, and beat upon that house, and it fell not, for it was founded upon a rock. And every one that heareth these sayings of mine, and doeth them not, shall be likened unto a foolish man, which built his house upon the sand, and the rain descended, and the floods came, and the winds blew, and beat upon that house, and it fell, and great was the fall of it. Chat! Chat! Can we read that part one more time? Can we read that one more time? Let's do a different version, so maybe it'll make a little bit better sense. I think it's the American edition. Nope, that's not right. I think it's the new. I was reading the wrong one. It's New King James Living. Ah, here it is. Here it is. Here it is. Build on the rock. Therefore, whoever hears these sayings of mine and does them, I will liken him to a wise man who built his house on the rock, and the rain descended, the floods came, and the winds blew and beat on that house, and it did not fall, for it was founded on the rock. But everyone who hears these sayings of mine and does not do them will be like a foolish man who built his house on the sand, and the rain descended, the floods came, and the winds blew and beat on that house, and it fell, and great was the fall. Ah, chat. Beautiful, beautiful reading. Beautiful reading. Don't you just love the Bible, chat? It just gets rid of everyone. Everyone leaves as soon as you whip out the Bible. Don't you just love that? I enjoy it. I enjoy it. I enjoy it, chat. I enjoy it. Alright, should we actually get into the earnings now? Amen, amen, amen. Amen, amen. Amen, chat. Amen. Just read some Creed lyrics. Let's go then. Let's make our escape. Oh, let's go then. Oh, let's go then. Let's make our escape. Oh, let's go then. What's up, Eat, Trade, Travel? Hope you're doing good. Hope you're doing good. We can do the Tale of the Talents. Seems fitting today. What's that? What's the Tale of the Talents? Tale of the Talents. Ooh. I didn't. Okay. The Parable of the Talents. For it will be like a man going on a journey who called his servants and entrusted them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug it into the ground and hid his master's money. Now after a long time, the master of those servants came and settled accounts with them. And he who had received the 5 talents came forward, bringing 5 talents more, saying, Master, you delivered to me 5 talents here. I have made 5 talents more. His master said to him, Well done, good and faithful servant. You have been faithful over a little. I will set you over much. Enter into the joy of your master. And he also who had the 2 talents came forward, saying, Master, you delivered to me 2 talents. Here I have made 2 talents more. His master said to him, Well done, good and faithful servant. You have been faithful over a little. I will set you over much. Enter into the joy of your master. He also who had received the 1 talent came forward, saying, Master, I knew you had to be a hard man, reaping where you did not sow, and gathering where you scattered no seed. So I was afraid, and I went and hid your talent in the ground. Here you have what is yours. But his master answered him, You wicked and slothful servant. You knew that I reap where I have not sown, and gather where I scattered no seed. Then you ought to have invested my money with the bankers, and at my coming, I should have received what was my own with interest. So take the talent from him, and give it to him who has the 10 talents. For to everyone who has will more be given, and he will have an abundance. But from the one who has not, even what he has will be taken away. And cast the worthless servant into the outer darkness. In that place there will be weeping and gnashing of teeth. For to everyone who has will, more be given, and he will have an abundance. But from the one who has not, even what he has will be taken away. And cast the worthless servant into the outer darkness. Damn, that's some heat right there, chat. That's some heat. Who told me to read that? Deja vu? That was some heat right there. That was some heat right there, Deja vu. I've read that before, actually. I've read that before. That was some good stuff. That was some good stuff. Where were you guys today? How come you guys only come in when there's news and the stock is up? Where were you guys when the stock was down? Where were you guys? What happened? It's kind of weird, right? It's kind of weird how you guys only stop in when the stock is up. It's a little weird. It's a little sus. I don't know. Not gonna lie, it's a little sus. A little sus. A little bit sus. A little bit sus. All right. Should we go through the earnings now, I guess? Should we go through the earnings now? Have they dropped the 10Q? How come the 10Q isn't dropping? I want to read the 10Q. We care about the stock, that's why we get here. No, or did you think we come here for you? Well, you can be banned forever. You can be banned forever. Goodbye. I mean, you should be here for me. Who gives a fuck about this stupid stock? If you already have it in your portfolio, why does it matter what news comes out? Why does it matter if the stock's up? Why does it matter if the stock's down? If you're a real investor actually holding this in your portfolio, and you actually believe in it, it shouldn't matter whether there's news or whether the stock's up. And also, I don't want people here who are only here when the stock's up. If you're not going to watch the stream because you like the stream, why do you come here? Why are you wasting your time coming here? If you don't like the stream, don't come in. If you're only going to come here when the stock's up, don't come in. If you're only going to come here when there's news, don't come in. You guys can go watch someone else. I only want people who actually like the stream here. So there. There. If you don't like the stream, don't come to the stream. Simple as that. Simple as that. If you're not going to be here for the bad times, I don't know. It's kind of whack. The bad times are when you should be here. That shows that you're a real investor who actually believes in this. If you're just here when the stock's up and the news comes out, I don't know how much you actually believe. It's very debatable. I don't even know if you're a real investor. I don't even know if you're a real investor if you come in here when only when the stock's up. It's pretty interesting. Some of us have careers, families, only have time to look whenever there's information worth looking at. That's fair. But can't you go, like, look up the information yourself? Why do you gotta come here? Can you not go read it for yourself? Why do you come here? I wish the 10Q would come out. That's better to read than this. What if I only want to come in to hear you read the Bible? Well, I don't know. I won't argue with that. That's a good thing to be stopping in the stream for. It's been a while since we read the Bible on stream, though. It's been a while. It's been a while since I read the Bible on stream. It's been a while. Wait, didn't someone say the revenue was down? It doesn't look like the revenue's down. Kind of weird. Kind of weird. Didn't someone say the revenue was down? I don't think the revenue's down. All right. I guess we'll read it finally. I think you guys have waited long enough. I've talked my shit. We've read the Bible. We've done everything there that we can do. We've done everything we can do. But I was being serious. If you're only gonna come here when the stock's up or when there's news, don't come to the stream. If you don't like this stream, don't come here. Plain and simple. Plain and simple. Go watch someone else. I know this is the best place to get information, but if you don't like the stream, don't come here. What's up, Battle Rat? How you doing, man? All right. GameStop discloses first quarter 2026 results. GameStop today released financial results for the first quarter ended May 2nd, 2026. The company's condensed and consolidated financial statements include GAAP and non-GAAP results below. First quarter highlights. Highest quarterly net income in GameStop's history. Wait, I need to restart the stream clip. My bad. There's something I wanted to say before I started the stream clip, and it wasn't what I said. I gotta restart the stream clip here. My bad. My bad. All right. GameStop just released a surprise quarterly earnings report. They didn't even announce like the date. They just randomly dropped this. GameStop discloses first quarter 2026 results. GameStop Corp today released financial results for the first quarter ended May 2nd, 2026. The company's condensed and consolidated financial statements, including GAAP and non-GAAP results, are below. First quarter highlights. Highest quarterly net income in GameStop's history of $389.6 million. Highest quarterly net income in history, chat? Are you kidding me? Highest first quarter operating income in GameStop's history of $143.3 million. Holy cow, dude. Net sales grew 14% year over year. Oh, wait, I thought their revenues were dropping. What happened to that? I thought their revenues were dropping. Wait, net sales grew 14% year over year? I thought the revenues were dropping. No, what are the bearish people gonna say now? Driven by collectibles, cash, marketable securities, digital assets, and related receivables, and collateral pledge for derivative asset of 9.7 billion. Oh my gosh. See, that means they're selling puts to buy the eBay call position because they wouldn't have this much cash on their balance sheet. Oh wait, that's with the Bitcoin and stuff also. We'll look at the numbers and actually get a legitimate number, but I'm pretty sure they're selling puts to afford the calls that they're buying on eBay. They're selling eBay puts to buy the calls. First quarter overview. Net sales were $835.3 million for the first quarter, compared to $732.4 million in the prior year's first quarter. Selling, general, and administrative expenses were $201.6 million for the first quarter, compared to $228.1 million in the prior year's first quarter. Operating income was $143.3 million for the first quarter, the highest first quarter operating income in GameStop's history, compared to an operating loss of $10.8 million in the prior year's first quarter. That's insane, because last year was a really good year as well. That's a huge quarter, man. That is a massive quarter. Excluding impairment and other items, adjusted operating income was $140.5 million for the first quarter, compared to an adjusted operating income of $27.5 million in the prior year's first quarter. Net income was $389.6 million for the first quarter, compared to net income of $44.8 million for the prior year's first quarter. Dude, that is huge, bro. That is huge. They made $143 million just off the stores, but $389.6 million total for a quarter? Bro, that is massive. That is absolutely massive. Excluding impairments, gain on digital assets and related receivables, unrealized gain on derivative asset, and other items, adjusted net income was $179.3 million for the first quarter, compared to an adjusted net income of $73.1 million for the prior year's first quarter. Okay, so they don't have as much gain on the options. I mean, what was eBay's price on May 2nd, though? I think that's a really good thing to look at. May 2nd, eBay's price was 102 about. So, yeah, I mean, you're up quite a bit more since May 2nd, but... So, yeah, they should be up a little bit more on the eBay option position, but still, that's massive, man. That is huge. Total cash, cash equivalents, marketable securities, digital assets, and related receivables, and collateral pledge for derivative assets were $9.7 billion at the close of the first quarter. This included $8.4 billion of cash, cash equivalents, and marketable securities, compared to $6.4 billion at the close of the prior year's first quarter. Okay, so their cash is actually down a little bit. So maybe they were buying more of the calls with just their cash. Maybe they're not selling puts. I don't really know. I would assume they're selling puts, but I guess I don't know. $1 billion in collateral pledge for derivative assets during the quarter. Oh, okay, so $1 billion is pledged. Okay, that makes sense. And approximately $0.4 billion in digital assets and related receivables. On June 2nd, 2026, the company's board of directors unanimously approved a discretionary $2 billion share repurchase authorization through June 2nd, 2029, replacing the prior authorization March 20. A $2 billion share repurchase? Nah, chat. $2 billion share repurchase? Are you kidding? $2 billion? No. 2 billion share repurchase, chat? Bro, that's huge. That's massive. That's absolutely massive, chat. 2 billion share repurchase program. I wonder what prices they're going to be buying the shares at. And also they're going to I mean, that should help get the, dude, anyone who voted against for the share offering, the 2.5 billion share offering, you better go change your fucking vote right now. If you voted against for the 2.5 billion share offering, you better go change that vote. You better go change that vote, bro. Holy guacamole, dude. Holy guacamole. Dude. Let's go. Let's go, chat. Let's go. This is huge, chat. This is huge, chat. Net sales, 835 million. Cost of sales, 495 million. SG&A, 340 million. Or wait, SG&A, 201 million. Gross profit, 340 million. Asset impairments, negative 4.6 million. Operating income, 143.3 million. Interest income net, 83.7 million. Unrealized gain on derivative assets net, 268 million on the derivatives. Dude. Huge. Gain on digital assets and related. Dude, they're only down 1 million on the digital assets? What? Why is that like that? That's interesting. How is it only 1 million? Did they really make their whole loss off the Bitcoin call sell? Why is it only 1 million? I know they pledged all their Bitcoin though, so maybe technically the Bitcoin's not on the balance sheet anymore. I could see that maybe, but also at the same time, potentially, because they had 131 million loss on the Bitcoin position the last earnings report, but now it's only 1.1 million, so either they pledged all the Bitcoin and it's not on the balance sheet anymore, or they paid for it with the Bitcoin call sale. Super interesting. Other income net, 9.9 million. I think that's negative. I think the interest income one, for some reason, they put it in parentheses, but that's not negative. So I'm kind of assuming the gain on derivative assets isn't negative. I don't know why they put it in parentheses. It's kind of weird. Because usually parentheses means negative. So other income, 9.9. So income before income taxes, 506.4 million for a quarter? Are you fucking kidding me? 506 million for a quarter? Nah, chat. What? What? Income tax expense, 116.8 million. Okay, so they just had a lot of taxes, but still, that's insane, dude. That is insane. EPS 0.87. Dude, diluted EPS 0.66. Dude, last quarter was only 0.1 EPS. Bro, they 8x the EPS. They fucking 8x the EPS, bro. Oh my god. Oh my god, bro. This is crazy. This is massive. Holy shit. Let's go, chat. Let's go, chat. Oh, what happened to all the people? Oh, what happened, bro? Like a week or two ago, everyone was talking all tough. Like, GameStop's going to 10, it's going to 15, it's going to 17. What happened? Where's the talk now? Where's all that big talk now? Oh, you guys thought you were so smart. What happened, bro? You guys thought you were so smart. Huh. Weird how that works. Cost of sales, 59.3 million. Gross profit, 40.7 million. What is this? Percentage of net sales. Oh, is this percent? Okay, so this is percentages. I gotcha. Okay. I was confused for a second. I was like, what? Okay. So 59.3%, cost of sales, gross profit 40.7%, SG&A 24.1%. All right, this is percentages, right? Dude, SG&A is down again. That's crazy. Asset impairments negative 0.6. Operating income loss. So 17% operating income. I'm confused on the percentage part. I don't really like this. I don't really like the percentage of net sales thing. This is kind of weird. This is kind of weird. I don't really like how this is set up. It's kind of weird. I don't really like how that's set up. But either way, net income was 46.6% of net sales. That's huge, dude. That's huge. Last year, their net income was only 6.1% of their net sales. Or last quarter of last year. Fucking 46.6% of net income was their net sales. That's crazy. Represents unrealized gain on put and call option transactions, net of related expenses, entered into by the company that provide economic exposure to shares of eBay Inc. common stock. Wait. 1 represents unrealized gains. I'm confused on that. Why does it say that? It's confusing. I don't like this part of the balance sheet. It's kind of confusing. But I think it's just percentages, and I don't know why that says that. $651 million in net sales just in the US. Dude, $282.3 million profit from just the US stores. Australian stores are profitable, it looks like. Or wait. They might be closing the Australia stores. Why doesn't it have an operating income? That's weird. That's really weird. This is a weird balance sheet this time. This is very interesting this time around. A very odd balance sheet. But either way, operating income through all the stores, all the countries, 143. I think they're closing Australia. Like, they must be closing Australia. I don't know. That's weird. That's really weird how that doesn't have... Unless it's zeroed out. It could be zeroed out, but I don't really want to go through the calculations right now. Interest income, 83 million. Unrealized gain on derivative assets, 268. Dude, this is crazy, bro. Just 389.6 million in net income for 1 quarter, bro. That's ridiculous. Property and equipment net for France, Europe is classified in assets held for sale on our consolidated balance sheet. Oh yeah. I wonder... They don't have... It doesn't say anything about Australia there. But let's see. They're sitting on 7.3 billion cash, 970 million of marketable securities, receivables 58 million, derivative asset 285 million. That must be how much that must be the position. Okay. Collateral pledge for derivative asset 983 million. Digital assets and related receivables 369 million. Okay, so they still have the digital assets on there. But since they pledged it, I don't think it counts towards the income, which is pretty interesting. Merchandise inventories, 423 million. Prepaid expense and other current assets, 27.7 million. Assets held for sale, 152.4 million. Last year, first quarter was 226 million, so I think they sold something. I can't remember what it was for the last earnings report, but I think it was still 200. I don't remember, though. So total current assets, 10.668 billion. Goodness gracious. Oh, man. Property and equipment net accumulated depreciation of 492.6 million and 572.5 million, respectively, 51.9 million. Operating lease right of use assets, 164.7 million. Deferred income taxes, 26 million. Other non-current assets, 63.2 million. So I want to, maybe we'll do this tomorrow, but I want to compare how they performed this quarter compared to fourth quarter. this is just comparing to first quarter of last year. So accounts payable, 263.4 million. Accrued liabilities and other current liabilities, 372.5 million. Current portion of operating lease liabilities, 81.4 million. Wow. Liabilities held for sale, 143 million. So total current liabilities, only 860 million of total current liabilities is crazy. And then you have the long-term debt from the convertible bonds, 4.166 billion. Wait, did they pay some of that off? I think potentially they paid off some of their debt. I don't know. Like I said, I need to compare this to last quarter, but potentially they paid off a little bit of their long-term debt, which is really interesting. Operating lease liabilities, 91.6 million. Other long-term liabilities, 14.2 million. So total liabilities is 5.132 billion. Total stockholder equity, 5.842 billion. Crazy. Net income, 389.6 million. Depreciation and amortization, 4.5 million. Stock-based compensation expense, 8.5 million. We already went through all this, didn't we? Deferred income taxes, 61.4 million. I swear we already went through all this stuff. Pretty interesting. I don't really want to go. Let's see. Whoa. What is this? 13 weeks ended. Wait. 13 weeks ended? Wait, so they did all this in the past 13 weeks? Wait, what's the difference between this and what I... Is this audited? Is that why? No, it's not audited. What's the difference? So confusing. Such a weird balance sheet this time around. Let's see. So proceeds from maturities and sales of marketable securities, 1.7 billion. Collateral pledge for derivative assets, 983 million. Proceeds from written options on digital assets, 5.8 million. What? Oh, they didn't. Okay, that's odd. Maybe the Bitcoin. That's weird. That's very weird. Very weird. Purchases of marketable securities, 6.4 million. Let's see. Net cash flows provided by investing activities, 742.9 million in net cash flows. What? Dude. This is fucking crazy, dude. Holy shit. Hardware and accessories and software sales are down from last year's quarter, but collectibles are up huge. So 333 million from hardware and accessories, 152.7 million from software, and 348.9 million from collectibles. Crazy. And total 835.3 million. Yep. Hardware and accessories include sales of new and pre-owned hardware and accessories, hardware bundles in which hardware and digital or physical software are sold together in a single SKU, interactive game figures, strategy guides, mobile and consumer electronics. Software includes sales of new and pre-owned video game software, digital software, and PC entertainment software. 3 includes the sale of apparel, toys, trading cards, gadgets, other retail products for pop culture and technology enthusiasts, and submission services for the authentication and grading of trading cards. Non-GAAP results. So the other one was GAAP results, I guess. So adjusted SG&A, 201.6 million. Transformative, okay. Operating income, 143.3 million. So it's just the same shit, just non-GAAP. Reconciliation of net income to adjusted EBITDA. So our adjusted EBITDA is only 163.4 million. You need to get that thing cooking, man. That's weak. You need way more EBITDA than that. Way more EBITDA than that. All right. Well, that's the end of that. Pretty interesting. Obviously, I hope they have more info on the 10Q. Have they dropped the 10Q yet? Why the fuck is someone at my... What the fuck? Someone's at my house. What are you doing, bro? I'm streaming right now. What are you up to? You don't want to stream? You don't want to come stream, bro? It's basically done, bro. Go check it out. This is the guy that helped me cut my concrete, chat. Oh. I know how to... You gotta here. This is the camera. So you gotta.
What's up, Nellas?
He comes in and grabs a Michelob straight off the rip. His phone's been off for like a week. The man, the myth. Well, pretty exciting stuff, chat. Pretty exciting stuff. Appreciate you all stopping in. Appreciate y'all stopping in. I don't know what we do now. Chat. I think we play Lambo Season, right? We play Lambo Season? I gotta play Lambo Season for the chat. I know that's what you guys are actually here for. I know. Don't you worry. I didn't forget about you guys. I didn't forget about the people that love Lambo Season, bro. You think I would forget about Lambo Season? Come on. Come on. Come on, chat. It's Lambo Season.
I can ask.
Push start, then I go. Man, it's Lambo season. If you're moving too slow, probably wouldn't ever see me. If I tell you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. Sometimes the money get to the pride, other times money don't make it to your side. Get it, then we spend it like it wasn't ours, cause you can't take it home with you when you die. Live fast, die broke, only you decide. Outside lights off, unsupervised. Bad wings when the doors go suicide. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. Man, it's Lambo season. If you're moving too slow, probably wouldn't ever see me. If I tell you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. But still wasn't none of this easy. Let me in the cold, they ain't need me. It's funny cause I ended up freezing. The diamonds all recent. Pastor probably think I need Jesus. I just need a new account of regions. Lambo season. I ain't on my side, I'm anemic. The hard times made me uneasy. Came out the city, but it feel like the city ain't leave me. Till my heart stop beating. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. Man, it's Lambo season. If you're moving too slow, probably wouldn't ever see me. If I tell you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy.
Alright, chat. Alright, chat. I gotta go. Appreciate you guys. Pretty hype. Pretty hype stuff. And we'll see if we actually get the 10Q drop soon. There should be more info in the 10Q, so I'll catch you guys tomorrow, I guess. Or if they drop the 10Q tonight, maybe I'll hop on stream. But appreciate you guys. Thanks for stopping in. I'll catch you guys later. God bless you. Later, Ruben. Later, Rosh. Survive and Thrive. Rickson. P. I don't know who else is here. Power Ranger. Afghan Battle Rat. Fishy Friends. Eat, Trade, Travel. I don't know who's here. If you're here, you know, type in the chat if you ever want a shout out at the end of the stream. But I'm out of here. God bless you.